Will it or will it not? The decision of the Reserve Bank's Monetary Policy Committee has the street deeply divided. India's robust growth numbers for the second quarter are raising questions about the need for lower rates, despite the record low inflation opening up room for the MPC to cut rates. And the falling rupee is only complicating matters for RBI even more. Now, against this rather dramatic backdrop, the CNBC-TV18 poll shows a clear majority still leans towards easing. 60% of our respondents expect RBI to deliver a 25 basis point rate cut, while 40% believe that the committee will choose to hold. But even among those that are expecting a cut, the belief is that the easing cycle is going to be very short. A strong 60% say the cycle will end in December itself, while 30% expect one last move in February, while 10% think the cycle has already ended. Now, on the eventual landing point for these rates, the sentiment clusters around 5.25% as the likely terminal policy rate. 60% of the economists back that level. Another 30% expect the RBI to settle slightly higher at 5.5%, and only 10% see room for a deeper move to 5%. Now, as far as the macro forecast is concerned, with the economy expanding at a far faster clip than anticipated, 8% average for the first half of the year already, half the respondents believe RBI is going to upgrade its FY26 GDP outlook to 7.1 to 7.2%, and 40% expect an even sharper rise to more than 7.3%. Now, the confidence in growth comes alongside strong disinflation trends as well. So a decisive 90% of those polled expect that the RBI will lower its FY26 CPI projection to 2 to 2.5%, while the rest foresee a slightly deeper cut. Now, even if RBI cuts rates, respondents are very clear that the policy stance will remain neutral, but the tone, they say, may soften. 60% in fact expect a dovish message reflecting comfort on inflation. Now, as far as the rupee's recent weakness is concerned, most do not expect it to influence the decision, with 80% saying the currency will not impact the outcome and the central bank will remain focused on its inflation mandate with an eye on growth. Finally, the liquidity surplus has narrowed amid the tax outflows and RBI's intervention in the forex market. And from December to March, we also typically see cash withdrawals from the system. So the market expects RBI to communicate some liquidity easing measures, including the possibility of an operation twist or OMO purchases.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Hey, thank you for watching this on CNBC TV18. Hope you liked it. For more such interesting news and updates, follow CNBC TV18 on all the social media platforms.